My name is Amapolo Ashayo, and I'm CEO of Skin Ideas Nigeria Limited. Skin Ideas Nigeria Limited, we have an online platform where we train people on how to do CS registration and trademark registration. The name of the platform is skinideasacademy.com. So on skinideasacademy.com, we have courses on how to register businesses, companies, NGOs. We also have courses on trademark registration. We have courses on how to file annual returns for businesses, for companies, for NGO. We have courses on how to download lost documents, on how to make different edits on existing CSC registration, like changing business name, changing address, changing the nature of business. Now, in this video, I want to explain what TCC means, what CIT, EDT, and how it applies to you as a business person or as a CSC agent. Now, I want you to like this video, I want you to subscribe, and I also wanted to share. Because over the years, we've trained a lot of CSC agents. Just this year, since we launched in our online platform in April, we've enrolled over about 600 students on our online platform, on our CSC Academy, CSC and Trademark Academy. So I've had questions from students on what CIT means. My client wants TCC. The FIRS reached out to my client for tax payment. What does it do? What's the implication? So I'm recording this video to be able to touch all those areas so that you understand these terminologies and you understand how they apply to you. Now let me start with this. As citizen of a country, you are expected to be paying tax. The tax law is not that stringent in Nigeria, or let me say, it's not enforced, but in other countries, it's highly enforced. It's highly enforced. Most of us would have seen cases of people going to prison for not paying tax, seen cases of people being arrested for not paying tax. So in other countries, the tax law is that strict, and you cannot just play them. They will fish you out and make sure that you pay tax. So now let's move ahead. The terms we'll be explaining, we're talking about CIT, which is company income tax. We're talking about EDT, which is excess dividend tax. Then we're talking about TCC, tax clearance certificate. And we'll also mention other things in the process. So, as I said earlier, every citizen or every business in the country should pay tax. So as a citizen, you should pay tax. As a business, you should pay tax. Now, in a video on this channel, I explained the difference between FIRS and GTB, and there I talked about the tax offices we have in Nigeria. We have the FIRS, we have the state internal revenue service, and then we have the local internal revenue service. So all of them have ways of generating their income. Now, the FIRS is the one who helps the federal government to generate revenue from citizens. The state internal revenue service is one that helps each state to generate revenue from the members of the state, and then the local internal revenue service helps the local government. Now, when it comes to CIT, only the federal government, which is the FIRS, collects CIT. So CIT is only payable to the FIRS. Now, CIT is company income tax. And who pays CIT? Any company that generates above 25 million annually in gross profit. Any company that generates more than 25 million in gross profit annually is expected to pay company income tax. So you are not generating more than 25 million annually, you are not charged. You are charged absolutely nothing for company income tax. So you are charged absolutely nothing for company income tax. Now, there is a way it's been graded. For businesses that generate from 25 million to 100 million, they are expected to pay 20% of their gross income. Let me put it down. For businesses that generate within 25 million and 100 million, they are expected to pay 20% of gross profit. So, of gross income. Of gross income. That is to say, their profit. Now, businesses that generate over 100 million annually, they are expected to pay 30%. So, those who generate 25 million to 100 million are expected to pay 20%. Those who generate above 100 million are expected to pay 30%. Now, how about businesses that generate lesser? Businesses that generate lesser are not charged for CIT. So, what they pay is minimum tax, and the minimum tax is 0.5% of gross turnover. 0.5% of gross turnover. Now, this applies to all business, all small businesses. Those that any business generating less than 25 million are termed as small businesses. So these is applied to small businesses, but business in their first 4 years are exempt. Small businesses, not all businesses, in their first 4 years are exempt from this minimum tax. Now, how about companies that they are not domiciled in Nigeria, but probably they have a branch in Nigeria? So for companies like that, they are expected to pay income tax on the amount of revenue generated from their branch in Nigeria. So if we have a company, for example, we have let's say we have Apple or Techno, and then probably they are from another Apple from another country, invested in Nigeria, has a branch in Nigeria. Now they are expected to pay income tax on what their branch in Nigeria is generating, and this also applies to to online platforms too, especially those who have websites already designated in .ng. They are expected to pay on the amount they are generating from their branch in the country. So now let's move to EDT. There's not much on EDT. EDT, as I explained, is excess dividend tax. So what excess dividend tax is just simply the tax that is being made on things like treasury bills, government bond, and all the likes. And the tax on this instruments are being like people, companies have been exempted from the tax on them. So let's move to TCC, now tax clearance certificate. Now, TCC is a certificate that has been issued for businesses and companies. So it can be issued by the Federal Inland Revenue Service (FRS) or the state Inland Revenue Service. So but tax clearance certificate can be issued by either the Federal Inland Revenue Service or the State Internal Revenue Service. So I made a mistake in the video I did before now. So state internal revenue service, not inland. So it's only federal inland, state internal, then local internal. So both of them are those who issue TCC. So they issue TCC to businesses that have paid tax. So it's a kind of say, okay, you have already cleared your tax, and then we issue a certificate to you. So most times business have to pay like a 3 years tax period. You have to pay tax over a 3-year period for them to get the tax clearance certificate. That is, they've been cleared for tax. So this is being required by governments for some government contracts and some organizations that, okay, you are not owing the country, or show that you are patriotic for the companies performing its obligations to the nation. So it can be issued by both of those revenue services. So if you have a client that needs TCC, you can get from FRS or from the State Inland Revenue Service. Usually, FRS issues to companies, and then for other businesses and individuals, they get it from the State Internal Revenue Service. So I believe I've been able to do justice to what CIT, what EDT, and what TCC means. For individuals can pay tax with the State Internal Revenue Service, or they can also pay with the local Internal Revenue Service. So they can pay at either of those two offices. And business also pay at either of those two offices. But CIT goes directly to the FIRS. So I believe I've been able to explain this. So if you understand, and if you've benefited from this video, I want you to subscribe to this channel. Please don't go without subscribing. Subscribe, click the subscribe button, like, and share. Thank you.